Good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome to my 2503rd edition of Short-Term Trading Live with Oscar. Traders, remember the risk behind this game? Very, very risky game. This morning, the CPI numbers came out. I don't think it mattered where your stop was. If you were in this trade in any way, shape, or form, you were stopped out unless you were long, right? So always trade with stops, put them in and put them in first. A lot of pain could have happened to you on this day if you were short without a stop. So put them in first. All right, traders, so what's next? For trading on Wednesday, the 12th, well, I should say the 14th of December 2022. It is day 2 of a 2-day Fed meeting. There is no trading from the Omni Trading Academy. Day 2 of a 2-day Fed meeting. The markets will have very volatile sessions today. So let me remind you of something. We are rolling over our contracts. If you are a futures trader, you are rolling over from December 22 to March 23, from Z to H. We're rolling over our contracts from Z to H, so please make sure that you do that, and let's go forward. So that's in, by the way, that's in E-mini, S&P, NASDAQ, Russell, YM, bonds, currencies, you name it, it's in all of it. All right, so what's next? Traders, I want you to take a look at what happened here. Today, CPI numbers came out in the E-mini S&P, and it just exploded above the 200 ball moving average, above this monstrous red resistance line, all the way up to the top of that weird formation we've been looking at all week long, well, really all month long. Isn't that odd? It went right to the top of that weird formation, came all the way back down, and is back below the 200 ball moving average. Now, what we would normally call this, back on the days of on the trading floor, you held all the orders in your hand. It was called the order book. We would refer to a day like this as they took all the work out on the top side of the order book. There's no work left. They hit all the stops. They took out everything. There's nowhere else to go now but the downside. That's the way we would view a day like this back on the trading floor. They took out all the work on the upside. Where else is there to go? Let's go look for work on the downside. So that is what we would normally say on the trading floor after a monstrous run-up like this, and then it comes all the way back down. So we'll see what that means after the Fed comes out, because right now it really matters what the Fed says, not what the chart says. Just pointing out what happened. Ran up, hit the resistance, went through. Now this red resistance line, by the way, this red one here, look how far back it goes to. All the way to the highs in January. Well, I guess to this high in April. All the way from those highs, all the way. It hits this high, it then hits this high, right? From here, boom, same line, never broken, never breached. And we moved to today, same line, got tested, took out the stops above it, came back down under it. So resistance has been tested. What the Fed says tomorrow will lead the way, but the charts are actually saying that we just exhausted the upside. We'll see. We're not trading tomorrow anyway. Let's move along. Look at the Russell. Tomorrow I'll come out in front of you and do a YouTube shoot where I'm standing in front of the camera. I thought the best way to illustrate the charts today was like this. So once again, for trading on 12/14/2022, Russell 2000. F flag did its job. If you were in the F flag at the wrong day without a stop, you were F'd, hence the F flag. Market went up, but look, it did the exact same thing the E-mini S&P did. Ran up, got above the 200, got above that really long resistance line, caved all the way back down, and is just about back inside the F flag. It's not, it's above it, but it's close. So all we did really was take out all the work on the upside and come back down to regular normal levels to see what's going to happen when the Fed comes out. And then we've got this. I think this is the important one. Look what the Dow Jones Transportation Average did. Now, if you recall, we looked at this in last night's video, and I said what's different about this is that when we hit the 200 ball moving average the first time, the market ran up, finally hit it. It hit it, came back down, got it above it quickly, and dissipated. Then finally, puts in a low, works its way back up, gets above, takes a gasp to try to get above it again. So let me point that out. Sort of same thing as this. Look, what happened was it got above, dropped, took a gasp, got above again, gasp of air, and then finally caved. Then here, we got up above it, 200 ball moving average. Then it dropped back down and rallied back up again, as you can see right here. Didn't quite get above, and then it caved. When we got to this instance, what was different about this instance is it got above, came back down, got above again, came back down, got above a third time. Now that's different, right? That is different. So we are still above it now. However, like the even the S&P and the Russell, look at this huge resistance line from the last peak to this peak to this peak and now this peak. So you've got resistance being tested. Now, being that we're not trading tomorrow, it's a free day. We can look at this any way we want. There's two ways to look at it. The Fed is going to make something dramatic happen. So it's either knock, 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 knock. You keep knocking on that door, it's going to open. Or we could look at it the other way. We have failed every time we've gotten up here. The Fed is about to speak tomorrow. What they say could drive it down. Now let's talk about fundamentals for a moment. The Fed has said, or at least has indicated, we don't know this for sure, that they're likely going to stop doing 75 basis point raises and go to 50. I think that means the market gets happy, bullish, and goes through. My personal opinion would be the market would go through without using charts, just thinking. Fundamentally, that means they're taking their foot off the brake. Powell's taking his foot off the brake just a little. If that's the case, there should be knock, knock, knock. Let's go through. The chart begs to differ. The chart says, you know what? You've taken out all the work on the upside. That's enough. You've hit resistance. Back down we go. That's the beauty of us not having to trade tomorrow. I don't care what happens. It might go down. It might not go down. So it might be a bar that looks like this. And it might be a bar that looks like that. I don't have to call it tomorrow. It's the Fed's day. So we're just going to observe. But what I will tell you is after tomorrow, we will have some formal direction of what to do. Now, again, because the Fed, if they stick to what they've indicated, if they're only going to raise by 50 and not 75, that should be your bar tomorrow. But we'll let the markets tell us what's going to happen, and we will react accordingly. Traders, thank you for tuning in. Remember, put your stops in first. Today we sold gold. We were stopped out immediately when the CPI report came out. Luckily, the stop wasn't as grand as our usual stops, but it still was a stop that was hit. Put your stops in first. Never forget that. Join me at livewithoscar.com. We'll watch what happens tomorrow when the Fed's, well, I don't know if they're going to speak. It doesn't matter. The Fed's going to raise rates. We'll see what that does to the markets. And then I want you to keep your emotions out of trading. Say this to yourselves over and over again, and by now I know you know what that is. Stops are in. Emotions are out. Traders, good luck out there. Don't trade tomorrow. Let the markets do what they got to do. We'll come back Thursday and catch up with them. And I will see you all at livewithoscar.com.